Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Metallurgical Corporation of China Limited Annual Report. Metallurgical Corporation of China Limited offers a diverse range of businesses and services across various sectors. The company provides engineering contracting services for metallurgical projects, including new construction, expansion, and renovation of steel and non-ferrous metals industries. In addition to engineering contracting, the company also engages in housing construction, municipal infrastructure engineering, and other projects. It offers operation services for steel mills and non-ferrous metals industries, as well as mineral resources development business. The company's featured businesses include manufacturing specialized metallurgical equipment, steel structures, and other metal products. It also provides high-end equipment, energy and environmental protection services, and engages in repair work, nickel-cobalt ore mining and smelting, and trading. Furthermore, Metallurgical Corporation of China Limited offers engineering supervision, consulting, technical services, and construction and operation of eco-friendly engineering projects. The company also develops and sells residential and commercial properties, as well as land. Metallurgical Corporation of China Limited maintains a market capitalization of $57 billion, broadly in line with the industry peer group. Metallurgical Corporation of China Limited trades at a lower price-to-book ratio of 0.28 times relative within the industry. While the stock does not screen as absolutely cheap, mixed valuation signals relative to industry peers prevent a definitive conclusion. With the broader industry trading at lower valuation levels, this may reflect transitional pricing dynamics rather than clear mispricing, warranting further analysis of earnings quality, growth sustainability, and balance sheet strength. The leverage on the balance sheet appears elevated, with liabilities of 78% of total assets. This raises some concern, and we should examine the industry and nature of the business to determine whether they justify the elevated leverage. Liabilities have grown faster than assets and equity, which is somewhat concerning. However, asset growth remains positive, suggesting management may be temporarily leveraging liabilities to fund expansion. Shareholder equity has grown consistently, but operating income growth is weak or inconsistent. Equity expansion may be driven by financing activities rather than core business profitability. The share count has remained broadly unchanged, indicating no significant dilution or buyback activity over the past 5 years. The company have a dividend yield of 3.7%. The income statement shows that the company revenue have been declining annually and operating income have not been increasing. This shows that the business is under pressure with rising cost and its management is unable to expand the business. The primary drivers of revenue growth or decline are multifaceted and influenced by various factors. A significant contributor to revenue decline is the decrease in operating revenue, which has dropped by 17.51%. Conversely, notable increases in overseas projects in several countries have contributed positively to revenue growth. Another factor affecting revenue is the performance of specific business segments. The engineering contracting business has seen a decline of 19.32%, while the featured segment business has experienced an increase of 2.65%. Additionally, the discontinued operations segment has decreased by 4.07%. The company's strategic shift towards differentiated capabilities and prioritization of specialized, refined, digital, and green development have also impacted revenue growth. Furthermore, the enhancement of core competitiveness through optimized business systems and comprehensive services is expected to contribute positively to future revenue growth. Overall, the drivers of revenue growth or decline are complex and influenced by a combination of internal and external factors. The net income of the company underwent significant fluctuations in the given period. Initially, it decreased by a staggering 80.41% year-over-year, indicating a substantial decline in revenue or profitability. However, there was an increase of $40,054,626 in the People's Republic of China, PRC, but this was offset by a decrease of $5,880,989 in other countries/regions. Despite the mixed results, the overall trend showed a downward trajectory for net income. The company experienced a decline of RMB 10,396,164 and RMB 97,170,975, representing a 17.7% decrease. This suggests that the company's revenue or profitability was declining across various regions. The profit margins also witnessed significant changes during this period. The operating profit margin plummeted by -45.87% year-over-year, while the net profit attributable to shareholders decreased by a massive 80.41%. However, there were some positive developments in certain regions, with an increase of 0.04 percentage points in PRC and 3.72 percentage points in other countries/regions. Despite these isolated gains, the overall trend for profit margins was negative. The operating profit margin decreased by 42.8%, indicating a significant decline in profitability. Additionally, there were decreases in selling expenses, 1.28%, and administrative expenses, 2.94%, further contributing to the downward trend in profit margins. The company's financial performance suggests a consistent generation of positive operating cash flow. Multiple instances across various pages of the report confirm this trend. For instance, net cash flows generated from operating activities for all 3 quarters in 2025 were positive, with figures ranging from RMB 12,593,882 to RMB 34,713,849. Similarly, net cash flows from operating activities in 2024 and 2025 were also positive, amounting to RMB 7,847,704 and RMB 15,322,753 respectively. The increase in cash balance over the period indicates a steady growth in operating cash flow. Furthermore, operating cash inflows for both years were substantial, with figures of $1,321,768 and $6,745,954 in 2024 and 2025 respectively. The increasing receivables from 2024 to 2025 also suggest that the company is generating more revenue, which likely contributes to its positive operating cash flow. In conclusion, the evidence presented across various pages of the report confirms that the company is indeed generating positive operating cash flow. This trend suggests a stable financial performance and a strong ability to manage its operations effectively. The company's debt level and interest expenses have undergone significant changes in recent years. On the one hand, short-term borrowings have decreased substantially, with a decline of up to 91% as reported on page 75. This reduction is likely due to the company's efforts to manage its liquidity and reduce its reliance on short-term financing. On the other hand, long-term borrowings have increased slightly, with a growth rate of up to 1667% as reported on page 75. However, this increase may be offset by the decrease in interest expenses, which has remained relatively stable despite some conflicting information. According to page 109, interest expenses decreased by RMB 57,538, indicating that the company is able to manage its debt costs effectively. However, there are discrepancies in the data regarding interest expenses. While page 77 reports an increase of RMB 261,462 in interest expenses for 2025 compared to 2024, page 80 shows a decrease of RMB 84,16 in interest expenses for the same period. These conflicting information suggest that further analysis is needed to determine the actual trend in interest expenses. In summary, while short-term borrowings have decreased significantly, long-term borrowings have increased slightly. Interest expenses have remained relatively stable, with some discrepancies in the data. Overall, the company's debt level and interest expenses have undergone significant changes, but the exact nature of these changes requires further analysis to determine their implications for the company's financial health. The company's performance can be analyzed based on the various segments and regions it operates in. On a positive note, the featured segment business saw an increase of 2.65%, while high-end sectors, overseas incremental markets, and metallurgical construction also performed well. Additionally, subsidiaries and other business units generated significant net cash receipts of $28,514,826. However, there were some segments that underperformed. The engineering contracting business experienced a decline of 19.32%, while the discontinued operation saw a decrease of 4.07%. Furthermore, the real estate segment and mineral resources business segments both incurred net losses. These poorly performing segments highlight areas where the company needs to focus on improvement and strategic planning to enhance its overall performance. There is no significant activity to report on acquisitions and divestitures. The company has not made any notable purchases or sales of assets, businesses, or subsidiaries that would impact its operations or financials. As a result, there are no changes to report in this area. The company's financial records clearly indicate that it has a history of paying dividends to its shareholders. This is evident from multiple references throughout the document, including pages 10, 84, 87, 89, and 91-92. The amount paid out in dividends varies, with $3,410,073 being distributed in 2025, page 87. In contrast, there is no mention of share buybacks in the provided text, suggesting that this option has not been utilized by the company. There are concerns about inventory buildup and potential supply chain disruptions. The data suggests a significant increase in the provision for decline in value for raw materials and work in progress. Raw material provisions have risen by 25.7% from 2024 to 2025, while work in progress has seen an even more substantial jump of 86.6%. These increases may indicate that companies are holding onto inventory due to supply chain issues or other factors, potentially leading to a buildup of unsold goods. That concludes the financial summary for Metallurgical Corporation of China Limited. Feel free to comment below, and I will be happy to answer them when possible.